today I want to highlight a quick clarification between a brokerage firm and a brokerage account. And likewise, I want to discuss if you're looking to open a brokerage account, I want to highlight the differences between a margin and a cash brokerage account, which you might be asked about when signing up. So, just as a point of clarification, a brokerage firm is a financial institution similar to the one shown on the screen here that helps in facilitating the execution of a financial investment. Within a brokerage firm, you can have a brokerage account. And the way you can think about a brokerage account is similar to how you might have multiple checking accounts within one bank. You can actually have multiple brokerage accounts within one firm. So let's take, for example, you decide to open an account within Charles Schwab, which is your brokerage firm. You might actually have three separate accounts within Charles Schwab. Your first brokerage account, for example, might be your personal investing account that you use to invest every month, for example, on your own. Your second brokerage account might be your IRA, which is an individual retirement arrangement, and this could be an account that you're using to save for retirement potentially 30 to 40 years down the road. And your third brokerage account might be an account for your child's education, which would be utilized 18 years approximately after your first child is born. So the overall point in highlighting these various brokerage accounts is that different accounts can have different financial goals, different timelines, different tax implications, different restrictions, and because of all these differentiations, they are potentially invested differently. And what I mean by that is that one account might have more conservative assets, meaning that you don't want to take as much risk with this account. Another account might track the broader stock market, meaning that you want to try to get the overall stock market returns. And yet another account or your third account might be considered more of an aggressive account, meaning one that you're willing to take higher risks in order to potentially reap greater rewards. Now, within a brokerage account, you might also be asked whether you want to open a margin or a cash account. And the simplest answer here is that you'll more than likely, unless you are an advanced investor or trader, more than likely you're going to want to open a cash account. And these are the most basic types of investment accounts because in a cash account, all the transactions have to be made with the available cash. And in a cash account, you're not allowed to borrow funds from your broker to pay for transactions. Now, on the flip side, you have what's called a margin account. This is typically usually not recommended for beginning investors. And what a margin account allows you to do is it allows the investor to borrow against the value of the assets in the account in order to purchase new securities. So essentially, you're getting a loan from your brokerage firm. And as with any other loan, you will incur interest costs when you buy securities on margin. So a margin account is basically where your brokerage firm lends you some money to buy securities, and you use the current securities in your portfolio as collateral for that loan.